Okay. Good afternoon, everyone. Thank you for tuning in. On behalf of Manila House, this is Bambina Olivares, Director of Programming, welcoming members and non-members alike to today's online conversation centered around international property, brought to you in partnership with the Global Mortgage Group and America Mortgages. If this is your first time to join us online, allow me to introduce Manila House. We are a private members club that opened in February 2017 with the aim of bringing together an assemblage of people from the business, creative, cultural, and intellectual communities who are drawn to each other by a shared interest to continuously learn about art, culture, business, food, politics, and from the diversity of their fellow members themselves. It is a community of curious, committed, and caring individuals, and it lives beyond the physical confines of the club. We began our webinar series in May 2020, covering and encouraging discussion about a range of topical issues from business and investment to health and wellness and arts and culture. We have featured both local and international speakers and continue to broaden our reach among members and non-members alike. Our previous webinars are all available for viewing on the Manila House YouTube channel. That said, for the non-members among us, you might like to consider membership to Manila House. We have a limited number of memberships still available. Please email membership@manilahouseinc.com for more information. We also hope that our members are enjoying their delicious food boxes, courtesy of GMG and American Mortgage. Please be informed that Manila House is open for dine-in to fully vaccinated members and their guests, and our takeaway service is open to the public. Please call us on 0917-816-3685 to place your orders. And now let's talk property, specifically how to buy property overseas and how to get a mortgage to buy property overseas. How many of us have considered buying a second home abroad, or perhaps a pied-à-terre for our children to have access to while studying in the US or Canada, for example? In many instances, buyers have had to pay in cash because they would have been ineligible for a mortgage. Our speakers today are here to tell you that you can indeed buy property abroad, and the process does not have to be mystifying. So please allow me to introduce today's speakers. Donald Clip is the co-founder of the Global Mortgage Group. With over 25 years of financial services experience, Donald Clip's career spans from being an equity research analyst to managing a global equities division for the second largest bank in the world. His strengths in building successful financial services businesses have proven valuable for GMG and America Mortgages in building a firm with best practices in sales, client coverage, and business processes. He is passionate about creating a culture of excellence at GMG, as well as incorporating ESG factors into how we work as a firm and individually. Donald founded GMG with Robert Chadwick, our other speaker, in 2018 to address the need for better mortgage options for those looking to purchase investment property overseas, initially in the US, and has now expanded to the UK, Canada, and Australia. Also joining us is Robert Chadwick, who is the CEO of America Mortgages. Robert has had over 25 years of financial services and mortgage lending experience, ranging from the founder and CEO of one of Hawaii's earliest and largest real estate publications, which after 13 years was sold to one of the nation's largest publishers. He also managed a wholesale lending division for Fremont Bank, dealing directly with regional and national banks and brokers. He managed a wholesale lending division for Morgan Stanley Saxton Capital, dealing directly with regional and national banks and brokers. He also managed a retail lending team, dealing directly with clients looking to purchase or refinance real estate, both residential and commercial. He is a serial entrepreneur, having founded and invested in various companies in multiple industries. He co-founded Global Mortgage Group in 2018 and now America Mortgages, seeing a need for a truly globalized approach for real estate investors to obtain a mortgage in countries outside of their country of domicile and passport. So with that, let me just, before we proceed, let me just mention a few ground rules. This event is being recorded and is actually live streaming on Facebook as well, and will be up on the Manila House YouTube channel in a day or two. Please use the chat box and the Q&A box for any questions and comments, and we'll get to your questions as we go along. Thank you. So now, shall I turn over to you, Donald?
Great. Thank you, Bambina, for the lovely introduction. I'm going to share my screen Now, there we go. All right. So is that working? Yeah, okay.
Yeah.
Okay, cool. Well, again, yes, thanks, Bambina. That was quite an introduction. So hi, everybody. It's great to be back in the Philippines, although virtually. And also thanks for spending the evening with us, and we definitely plan to make it worth your while. First off, I'm going to give an introduction of myself, Robert, and Global Mortgage Group. Okay, oops. Okay, Global Mortgage Group. So, I think a lot of this was covered in Bambina's introduction, but we're a global real estate, international real estate financing specialist. Our particular focus is with high net worth clientele globally. We've got offices in Singapore, Hong Kong, Seoul, Manila, and throughout Asia, as you can see. Now, in a short period of time, we've been able to be engaged with 300 lending relationships globally, 150 in the US and 150 elsewhere. And these are traditional banks, wholesale banks, private lenders, credit funds, family offices, etc. Our core markets are the US, UK, Canada, Australia, Singapore, and Europe on a case-by-case basis. Our US business is through our wholly owned subsidiary, American Mortgages, which we're applying for our banking license as well. And Robert is the CEO of that business. Robert is a co-founder of Global Mortgage Group with me. And I spend most of my time focusing on Global Mortgage Group. So a quick background about us. So as Bambina said, I've been in the financial services industry for quite some time, longer than I want to admit, in various capacities in fund management, family offices, and investment banking. And Robert spent a similar period of time in financial services, specifically in wholesale residential lending in the US with some of the biggest firms out there. Next is, in a short period of time, we've been able to fill this niche. Now, I don't want to make this presentation about kind of, how amazing we are, but, what my point is that, we're really good at what we do. We've won a bunch of awards as best in class in what we do. And I think that's important to relay out that, our credibility, our professionalism, and how we go about, this business. Now, the mission statement of...
Sorry, do you want to just try sharing your slides again? I can't seem to, they're not coming out.
Yeah, we can't see the slides.
Oh, is that better?
No.
How about now?
Hang on. No, did you press share screen?
I did. Okay, hold on, share screen again. Desktop 2, share. Okay, can you see it now?
Yeah.
Okay,
Perfect.
all right. Sorry about that, a short glitch. So let's go back to the awards. I think that's important. So we've, as mentioned, we've, over a short period of time, won several awards in terms of how we operate and best in class, and how we fill this niche in the market for, professional real estate financing to international clientele. Our mission statement, if you will, or core purpose, this is really important because it guides us in all of our decision making. And we want to democratize non-resident mortgages globally. And that is to say, getting a mortgage for investment purposes should not only be available for the wealthy, but it should be made easier, cheaper, and more transparent for everyone. Now, I'm going to use the US as an example when I talk about the landscape, the problems, the opportunities, but this is consistent with all the major investment property destinations. Okay, so in the US, let me move this up. If you look here in the US over the last 10 years, you can see that 100 to 200 billion US has been purchased by foreign nationals. Now, if you look at the dark blue area, you can see that 50 to 100 billion was purchased by non-resident foreign nationals. Okay. So this is really important because in terms of the foreign nationals that live abroad, this only accounts for 1% of total home sales in the US. Now, you have to keep that number in mind because it's going to be very relevant later. Now, this is even more interesting. Of that amount, 60 to 70% pay with cash. Now, there's several reasons for this, which we'll get into. But if you look at the global standard, this is well over 90%, i.e., if you buy property, you get a mortgage. Now, that number has changed over the past 1 or 2 years because people have made money off shares and cryptocurrency and other asset sales. So there are more people paying cash, but it's not, 60, 70%. So why is this? So I don't want to get too deep into sort of the financial plumbing of why this is happening, but focus some on some of the subjective issues. So for example, one, as I said earlier, foreign nationals are only 1 to 2% of total mortgages in the US. So banks and loan officers are not really incentivized or motivated to really help. And obviously there's also cultural nuances where, somebody in the US may not understand sort of the intricacies of an overseas borrower, and obviously time zone issues. You have to wake up in the middle of the night, speak to your loan officer. Now, for us, this is actually all we do. 100% of what we do are actually clients or borrowers that don't live in the country. And these are foreign nationals or expats. Now, through our global footprint of offices, we're in the same time zone as our clients. And we also have a cultural understanding, whereas, the borrowing capacity of somebody in China or the willingness or availability of, qualifying requirements, we know the difference between India, China, UK, Canada, Philippines, for example. We know what's the best time embassies are available. We know onshore tax accountants that could help. And this is what we bring to the table. Second is an information gap. And I'll explain some of this a little bit later, but, for foreign nationals looking to buy, say in the US, the lenders are actually not banks, they're wholesale lenders. And many don't know that wholesale lenders account for 60% of the mortgage market. Now, there's actually no way for an overseas borrower to get direct access because they're wholesale. They have to deal with licensed agents or licensed brokers, which we are, and we're the only ones who have an office overseas. Now, and as you can see, 60% of the market uses wholesale lenders. So this is not a new phenomenon. This is how things are done in the US. Now, I said early on in the presentation, we now have 150 direct lending relationships in the US. So we've done the hard work for you. We found the best lenders for you. And in the wholesale lending market, the lenders compete on pricing. So you get the benefit of that. Whereas if you go into a bank, they're selling you their own bank program. So you don't get, competition on rates. Last but not least, one of the problems is that mortgages have always been created for their own citizens. So to the extent that a bank will accommodate a foreign national, they're just tweaking the program to accommodate. Now, I'll explain some of this in subsequent slides, but the current national approval rate for mortgages are 60%. So that is to say that 98, 99% of the overall pie are US citizens that qualify that are in the US, and that's 60%. Can you imagine the approval rate for a foreign national living abroad? It is really, really low, right? Our solution, well, our mortgages are created specifically for our clients. We're not selling what we want to sell, we're selling what our clients need. So we work with our lenders to create programs specifically for our foreign national clients. Our approval rate is 97%. Banks in the US that target foreign nationals, through our data, it's 20 to 30% max. A lot of those loans get rejected 1-2 weeks before the finish line. Now, non-bank lenders. So this is something that many don't understand in the market. I mean, if you look at here, non-bank lenders in the US, and these are banks that don't take in the customer deposits, they account for 60% of the mortgage market. So for example, in 2020, $4.4 trillion worth of loans was originated. Of that, 2.6 trillion non-bank lenders. Okay. Now, if you look at the year-on-year growth, it's staggering. It's doubled. 2019 to 2020, it's doubled. So, we're bringing common and best practices in the US to our international clientele. Okay, so this is, before we get into the rest of the presentation, I wanted to sort of clarify and explain the differences between regulated and unregulated loans, because this exists in all major markets. Oftentimes we get clients that say they read in the Wall Street Journal that prime rates are super low. Why can't I get that? Well, those are regulated loans so for example, in the US, regulated loans are for citizens. They're for people with very good credit score. They're a salaried employee, but more importantly, the lending guidelines are based on what Fannie Mae and Freddie Mac's underwriting criteria, because the banks are moved over to the balance sheet of those entities. Okay. And banks traditionally are sort of subsidized. They're subsidized by the government to promote home ownership, and those type of issues. The lenders for regulated products are traditional retail banks. They would definitely have the lowest rate, but they're the hardest to qualify. They're a very high rejection rate, and it's getting harder and harder. Unregulated loans are basically the loans that we would be offering. So anytime a non-resident foreign national is looking to buy a home in the US and requires a mortgage, those are always unregulated loans. They're called different things in different markets. In the US, they're non-TRID, non-conforming. In the UK, they're called buy-to-let loans. These loans, will accept overseas income, overseas credit, accept entrepreneurs. They're very more flexible. And the type of lenders, these would be wholesale lenders, private lenders, credit unions. They're easier to qualify, higher acceptance rate. And I think that's something that needs to be, understood. Now, the pricing of unregulated mortgages tend to come from how the secondary market of these notes are trading, as opposed to, say, dictated by central banks. Now, historically, unregulated mortgages were significantly higher than regulated, but not anymore. I think competition, because it's 60% of the market, competition has brought those rates down very close to what a sort of an onshore citizen would be paying. Okay, so let's get into sort of the meat of the presentation. So, like we said earlier, Global Mortgage Group is an international mortgage specialist. These are our core markets. Now, the United States, I'll let my business partner and co-founder, Robert, go into that in more detail, but I'll focus on UK, Canada, Australia over the next few slides. So the UK, obviously a very, very, busy market for us, especially in Asia. Our lenders, range from, retail banks to private lenders to quasi-private banks. The lenders some lenders will require assets under management, some won't. So it varies, but our loan to value can go up to 65 to 70%. The tenure of the loans range from 5 to 25 years. The rates, these are all based off a Bank of England tracker rate, but which is not that high at the moment, but all inclusive, these range 2 to 4%. Time to close is, 3 months and above. The banks normally charge a small fee. Now, the variables that affect the pricing are, how much assets are you willing to put down, if any? Do you have any existing UK credit footprint? The type of home? What is the rental income of that property? Okay, so these are all fairly standard. We're going to be talking about bridge lending, throughout the presentation, but it's worth noting that in every market, US, Canada, UK, Australia, you name it, the business has been very good. In fact, it's what we call a seller's market, because if you're not able to get your financing in place, you may lose out on the property. So it's really common now in these markets to use a bridge loan to quickly purchase the property and then take your time to refinance that with a traditional bank loan. Now you could use that time to create a local credit footprint. But these loans are very quick to close. Or if you have property that you purchased in the past that's gone up significantly, we can pull out cash from the equity and per se, for example, in the US, and use that cash to buy a home in France, where qualifying is more difficult. And this is by far probably our most popular solution at the moment. In Canada, it's very similar. The loan to value is up to 65%. The loan tenure is 25 to 60 years, and rates are very low. They range from 2 to 3%. Time to close is fairly standard. It's at least 3 months. The debt to income to qualify is 40%. What makes Canada a little bit unique is that the lenders are actually banks. So these tend to be regulated loans. Bridge lending would be unregulated, but in Canada, as I discussed earlier, these would really be regulated loans, even if you're a foreign national. Now, Australia, again, a super hot market, especially for foreign nationals. The loan to values that we can lend up to are up to 65%. Tenure up to 25%. And depending on the lender and the speed and the qualifying requirements, the rates range from 3.9% up to 5.5%. Time to close, 1 to 3 months. Again, like anything in life, the cheaper something costs, the more paperwork you're going to have to complete and more questions. Signing the closing documents for these countries would either be at the local embassy or a licensed law firm of that country. So for example, if you're in Hong Kong or in the Philippines, you could find a Australian licensed law firm. We've never had an issue with this. Okay, the loan process. I mean, this is a very sort of high level process. It's fairly consistent. The step one would be a consultation. You speak to our loan officer. We really understand what is your specific requirement. Is the asset held in a trust? Is it held in an offshore vehicle? Maybe you are an entrepreneur or you report low income, but you're asset heavy. We gather that information and then we enter a research process where we identify the best lending options for your specific criteria. Then we speak to the client and present those options. Typically, it's 3 to 5 options. And then we discuss the pros and cons. The client makes their decision, and then we go into the application process. This is where our team works with the client to gather the information to formally apply for the loan. Then the lenders will issue some form of an approval, whether it's pre-approval, conditional approval. Once that's done, the remaining period of time is used to clear these conditions. Now, some loans are easier, some loans are harder. If the loan process goes over the end of the month, we may need to ask for another set of documents, but our team is there to walk this process throughout the entire life of the loan process. Then it's signing, usually at an embassy or law firm, and then it's funding. And given that, our focus is really high net worth, we spend a lot of time working with family offices and private banks. A lot of what we do is international specialty real estate lending, and these are larger ticket transactions, global mandate, they're more complex. And they're more institutional in nature. And it could be, a family office or high net worth individual wants to purchase a golf course and maybe a hotel in the UK, and we take those assets and then we find a loan option for that. So that's a quick snapshot of our, our capabilities outside of the US. for the remainder of the presentation, I'll hand this over to my co-founder, Robert Chadwick, who's the CEO of America Mortgages, our wholly owned subsidiary in the US. Robert, over to you.
Thank you, Donald. Thank you, Manila House, and everybody joining in. If we could go to the first slide, Donald. Sure. So America Mortgage we are very unique. We focus only on foreign nationals and expats. So as Donald mentioned earlier, we don't deal with anybody that's living in the US. Everybody is living somewhere abroad. We're wholly owned by Global Mortgage Group. So as we realized that the need for US properties increased, we launched American Mortgage to be able to solve a lot of borrowing situations that borrowers had. We have our main US office is in San Antonio, Texas, and our Asia headquarters is in Singapore. Currently, right now, we have approximately 150, maybe a little bit more, direct lending relationships with banks and specialty lenders and US lenders in general. We have over, we can lend in all 50 states, and I'm one of the co-founders of Global Mortgage Group, and I'm running the American Mortgage Division. So next slide. So what makes American Mortgages unique? Again, as I said earlier, our only focus is providing foreign national and US expat mortgages. So if you take you were to go to a regular bank in the US, or you call up even a local bank in whatever country that you are, and if they offer US financing, it's going to be very restrictive. For example, in the US, for every 1,000 clients they have, one person is going to be an expat or a foreign national. So it's not that they always can't do it. They would rather not deal with it. There's more paperwork, the understanding of the income, etc. It's just not what they would prefer to do. So for that reason, all the issues that you would have getting a loan as a foreign national, such as not having US credit, foreign earned income, foreign bank accounts, etc., you're not going to have with us. We've already worked out all the kinks, and we've been able to make it a very smooth process. So in order to qualify for a US mortgage, you do not need US credit. You can use credit from your home country. So the Philippines Credit has their own credit reporting agency, perfectly fine. Foreign earned income, absolutely fine. Foreign bank accounts. So banks that possibly will allow a foreign national or an expat to purchase property, a lot of times they require you to have a US bank account. In this case, there's no requirement to open up a US bank account. All of our loan programs are direct lending programs. So we're working directly with the bank or the wholesale lender. For a US expat living in Manila or elsewhere, you can get up to 80% leverage. For a foreign national, you can get up to 75%. What makes us, again, unique is all of our loan officers and our support staff work on your time. So, you're not staying up 2 or 3 o'clock in the morning to talk to New York. That's what we're doing. Next slide, please. So the US loan programs for foreign nationals. So you're able to get up to 75% loan to value on a purchase. On a refinance, you're able to get up to 70%. And that's also for a cash release. So whether you're looking to, perhaps lower your interest rate, or you're looking to extract equity out of your property, you can get up to 70%. Because we realize that foreign nationals and US expats are unique and they have different ways to qualify, we've made this very simple. So because we're doing loans from somebody from Shanghai to Sydney to Manila, we make it uniform. So rather than going through all your tax returns, your pay stubs, and all of these requirements that would be for a standard bank, all we require is, if you're employed, it's a letter from your employer. If you're self-employed, it's a letter from your accountant stating your last 2 years' income and year to date. It's very simple. If for some reason you don't show sufficient cash flow, you earn more money than what you're able to show that you're able to service, we can go off of just strictly the rental income of the property. So we're not going to ask you for any income documentation. We're going to use the income generated from the rental property that you're buying or that you currently own, and we're going to use that as the income in order to qualify. And I'll go into this a little bit in another slide, but for high net worth borrowers, we have it even more simple. All we need to see is if you have a stock, bond, crypto, some sort of portfolio that is fairly liquid. There's no encumbrance in the portfolio at all. All we're going to do is see 2 months of those bank statements and the average balance, and we're going to use that to calculate your affordability. It's very, very simple, very straightforward, no income required. So no US credit, it's not a problem. We can use your credit out of Manila. If for some reason you don't have sufficient credit, there's always workarounds. These loan programs are for purchase, refinance, cash out, equity release. Basically, we cover the whole gambit of what you would do for US real estate. Minimum loan amount for the US is $150,000. So if you look at a minimum purchase price or a minimum value of the property, it should be around $200,000. Maximum for these standard mortgages is $5 million. So the loan options that we have, this is quite unique to the US. All loans are amortized over 30 years, if you choose, regardless of the borrower's age. So whether they're 19 or 99, it's still a 30-year mortgage. We have fixed rates at 5 years, 7 years, 10 years, and 30-year fixed terms. And I think one thing that we have that's very unique, especially for an investor that's looking for increased cash flow, is we have a 10-year interest only. And what that is it's a fixed loan. So just as an example, say it's fixed at 5%. That loan is interest servicing only for the first 10 years. After that 10-year period, it converts into a principal and interest loan into a 30-year fix. So the total tenure of the loan is 40 years. So if you're looking at maximizing your cash flow, it's really a smart loan. Next slide, please. US expats. We try to make this as easy as walking into the bank in the US. I mean, we probably receive, it's no exaggeration, 10 inquiries a month, maybe more, where borrowers have gone to traditional banks or online lenders as a US expat. They get to the very end, and then the bank says, oh, you're earning your income in Manila or in Singapore and Hong Kong. I'm sorry, we can't help you. With our loan programs, they are very, very specific to the fact that you are not living in the US and you are making your income overseas. So if you were to use your tax returns, pay stubs, bank statements like you would for a regular conventional loan, absolutely fine. What makes us different and what makes us very unique, we don't require you to have a W-2. We realize that you're working for a foreign company, likely you're not going to have a W-2, and we have a workaway around it. We also offer the same programs that we have for the foreign nationals. If for some reason you're not showing sufficient income, but you do have the cash flow, we can go off of the rental income of the property, and we won't require any income documentation from you. And again, the same thing for the high net worth borrowers, we can go off of the portfolio loan. A lot of expats will have, they've been abroad 10, 20 years, whatever it may be, and they no longer maintain a US credit footprint. That's not a problem either. Again, just like a foreign national, we would treat you as a foreign national, so your loan to value would be decreased slightly to 75% on a purchase, 70% on a refi, but it would allow you to still borrow, again, as a US citizen. The good thing about this is you start reestablishing your credit. So within a few years, you can actually go back into a conventional loan. Again, same minimum loan amount, $150,000 with a maximum of $5 million in the same loan options. Next slide. So the high net worth loan programs, we have been really very, very busy in this market, especially recently. A lot of high net worth buyers for the New York market, for California, and certain areas, certain ski areas, et cetera. So on these loans, 5 million to really no maximum. The loan to value is slightly reduced because of the loan size to 60%. There's multiple ways to qualify. So if you are filing tax returns, it could be tax returns in the Philippines, perfectly fine. Or you want to qualify off of the portfolio loan. Now the portfolio loan, the term is called asset depletion, but there's no AUM required and there's no encumbrance of the portfolio at all. All we're going to do is take the 2 months of the statements and we're going to use that as a calculation to see what your debt serviceability is. And that's what you'll be able to qualify off of. Again, for purchase, refinance, equity release, absolutely perfectly fine. For these loan programs, there's a minimum loan amount of 5 million and a maximum, there is none. Again, same thing, amortized over 30 years, regardless of age, various fixed options, and also what is available, which makes us very unique to banks, is we have a 10-year interest-only option for these programs. So if you have a large mortgage and you put it into an interest-only, you're going to see a significant reduction in your in what you're spending a month for your mortgage. Next slide, please. So the type of loans that we offer, we cover the entire spectrum. We have specialists for each type of loan product. So we look at residential properties as a 1 to 4 unit. So if you're going to buy a single family home, absolutely fine, or a fourplex. We would look at that and we would price that the same as any other residential property. Commercial properties, we consider it if it's an apartment building or residential, anything over 5 units would be considered commercial for us. In that, it depends on the type of property, the location, et cetera, but we can normally get up to 60% financing. Commercial buildings, very similar to that. Portfolio loans, we see a lot of this throughout Asia. You start acquiring properties and you're using individual mortgages to pay for it, or if say you've paid cash. We require a minimum of 5 properties and a total cumulative value of $1 million. Now, each property can be as inexpensive as 50,000 US dollars. So we call it per door. So per door, it can be 50,000. And what it does is it will do we'll get appraisals on each property, of course, but we'll make it into one loan. So rather than writing out 20, 30 mortgage payments to 20 or 30 different banks, you're writing one to one lender and all of the properties are put under one loan. As Donald had mentioned earlier, our bridge programs are extremely popular right now, especially if you talk about in really competitive markets in the US. So the bridge loans, you can close same as cash. So basically we can close a transaction in the US in a period of 10 days on a bridge transaction. And what you would do is you would come in, you would put a cash offer in on the property. So it basically takes anybody out that is looking at regular conventional financing just from a time basis. And you would come in and you would close with a bridge loan. We would then come in and refinance it within a 90-day period and put it back into a proper loan. Bridge loans also help you increase liquidity. We see a lot of issues with clients where their businesses have been impacted with COVID. Perfectly fine. These are purely asset-based loans. So whatever your current financial situation is, it's not going to be taken into consideration. It's going to be, what is that property worth? How much are you looking to extract? And what is the current situation? So those are the types of loans that we offer. Next slide. So I think that's it for our presentation. We're going to have a question and answer period. So feel free to put the questions in. We'll read the questions out so everybody can have the opportunity to hear. And thank you for your time. Appreciate it. And we look forward to working with you in the future.
Thanks so much, Robert and Donald. Do you want to just quit share screen?
So we actually do have a first question. It says, if the property is in Manhattan and the underwriters, the mortgagers are mortgagers, underwriters New York State base, is there a preference for apartments, walk-ups, and co-ops? It's a very good question. All of our lenders for the US are going to be onshore lenders. It doesn't mean that they're going to be in New York. What makes us very unique is because we're a broker that has opportunities in all 50 states, we're going to find you the best loan program. That could be a lender in New York, it could be a lender in California. For the preference of apartments, walk-ups, and co-ops, everything is fine. Co-ops are a bit more difficult, for obvious reasons. So I would recommend staying away from it, but that's always available.
There's a question that I see regarding Spanish property. Is there room for helping with a mortgage for Spanish property for US persons or company? So the short answer is yes. Now for Spanish property, obviously it's been a really kind of a popular destination, whether it's for the visa, passport, or it's just a beautiful place to, I guess, have a home. These are high net worth loans, and we work with onshore lenders. So the loan amount for a Spanish loan would have to be minimum 1 million euros. But these are all very, very bespoke. It's not really sort of a kind of a cookie cutter type program that you would have, say, in say Canada, UK, or the US. So definitely, and would love to have the opportunity to kind of discuss this with you.
So I think, Donald, there's a question about, do we offer loans in Japan?
No, we don't. We used to, I think, everything that we don't do just because we can. We need to make sure that the experience is good. And again, because we deal with a lot of institutional relationships like private banks or external asset managers, we need to make sure that we can control that experience for the client. And in Japan, unfortunately, it's just not doable. We could explore, but it's really difficult. You'd also have to fly to Japan to sign the documents. The loan applications are mailed. It's really an old-fashioned type of system. And also definitely not Hokkaido or Niseko. To the extent that it could be available, it would really just be Tokyo and some of the bigger cities.
And we have a question. Would you recommend purchasing via personal name or local corporation? Would there be any difference in taxes? I'm assuming that's for the US. We allow the borrower to vest or to own title in a corporate entity. We also allow blockers. So it's very common for somebody to hold a property in an LLC and then use like a BVI blocker for tax reasons. Whether or not it saves you taxes or it's more for the benefit of keeping your personal wealth away from any kind of legalities between the property, that's something you would have to discuss with your accountant or your legal advisor. Okay, what else we have?
We have a couple of other questions that actually came to me via WhatsApp. Are there any, where are people buying right now? Where are the hot places, like in the US as well as Australia? Like you said, Donald, Australia was becoming quite popular, Australia and let's say the UK.
Yeah, I think that's first of all, I think property in general has just been really hot. I'll let Robert talk about sort of which areas of the US, but globally, everything's been quite robust. I would say demand from Hong Kong in particular to the UK has been phenomenal. Australia for Asia in general has been very robust, just because I think it's close. They have a good school system. The housing is beautiful and it's new. But by far, as far as sort of kind of vacation type homes, Europe has been very popular, but US has been really on fire. I have to say, just from a yield perspective, it's the highest yielding market in the world, and it's only going to get higher. We have a macro team that writes economic pieces on sort of the outlook for this type of stuff, and they're saying that the rental yields are only going to get higher and higher as buyers will struggle with the ability to get a mortgage onshore, and so rental yields will go up. But I'll let Robert kind of elaborate which areas of the US he's seeing the most interest.
So I think if you look at where foreigners are buying, at least for us anyway, you have the typical states where people want trophy assets, New York, San Francisco, LA, Beverly Hills, that kind of thing. But if somebody is looking at a pure investment, most of the time we're seeing them buying in Texas, Nevada, Arizona, states that have a high growth rate. People are leaving New York, they're leaving California, and they're going central. So you see the housing markets there are fantastic, and rental yields are, especially if you take Texas, for example, a lot of corporations are moving in there. If I'm not mistaken, I think Tesla just announced that they were going to be moving to Texas. So it creates a huge market for investors to be able to purchase rental properties. A lot of people that will relocate won't buy a property on the initial relocation. They're going to rent, find the right area, and then they're going to buy something.
I think just to add, one of the benefits of what we do is we actually get to see the action on the ground, as they say. So when we see kind of the rental income that they're getting and the price they paid, and I know you can Google this, but these are facts. I mean, rental yields in the US specifically say in Texas and in Florida, they're high single, low double digits, and that's phenomenal, with a share price appreciation option embedded in that investment.
Do you actually get the reverse? Like, do you get your other clients overseas wanting to buy in the Philippines, wanting to buy property in the Philippines, and are there any kind of restrictions to that?
Yeah, the short answer is yes, we do. I mean, it's not a typical, kind of a major market for sort of our clientele, but yes. And, the trouble with the Philippines, although, is that we're unable to offer financing. I think we were trying to do it through PNB a while back, but, because, like everything in the world, whenever there's growth, people are going to flock to it. And I think Philippines, whether that's in, the Fort or, parts of the Fort, or even some parts of Makati, property prices have gone really, really strong, and people just pay cash,
Yeah, no, I noticed that. That people are kind of plopping down cash to buy a property here, just to bypass all the kind of labyrinthine mortgage requirements.
Yeah.
But there is interest from overseas.
Totally, yeah. And I think actually, some of the islands are starting to get, obviously, some of the islands are there's only one direction, right? They're only going to get more popular, whether that's Siargao or some parts of Palawan. If you take a longer term view, these are, there are not many places in Asia that have that type of topography, and water and beaches. So I might be a little biased, but I'm very pro Philippines.
Thanks. It's nice to hear. Although there are islands available for purchase, every now and then. Why don't we move to the UK now, where we have a question from Vince Garcia about the current 20 years fixed rates for a UK home. Would you be able to share?
The presentation, we did say it's around, including the Bank of England tracker rate, it averages around either 2 to 4%. And that number really depends on the lender and the AUMs. Like, like I said, it's just like anything in life. Like the lower the rate, they're going to ask you for more requirements, and it'll take longer, and it could get frustrating. So I think, our job is to say, listen, are you a busy entrepreneur? And, then this is not going to be for you. Trust me, you're going to get frustrated. Nobody's going to be happy, but maybe you have a personal assistant that can do all this for you, or, somebody that can help, then it's worth a try. Right. So we really kind of work through this and give you real honest, advice on that. So yeah, it's about, 2 to 4% for a 20-year fix.
I'm just taking off on what you said earlier, Donald. This is like a little bit anecdotal on my part, but apparently, well, you were saying that in the Philippines, a lot of the transactions for property tends to be in cash, right? Because of, whatever the loophole or the rigmarole that you have to go through. Whereas in the UK, I've just learned that you can't even deposit cash over the counter unless it's to your own personal account. Like, for example, I was trying to deposit cash to my daughter's account, and apparently you can't. Everything now is online, digital, whatever. I mean, there are no cash transactions anymore, and they explain, which makes sense. It was because of money laundering concerns, right? Does that necessarily happen in the US or any of the other countries?
Yeah, that's a really good question. So the short answer is, I think globally, everybody's on slightly heightened alert on this, money laundering and AML issues. Ironically, the US is probably a little more lax. It's also the breadth and depth and size of the property market. It's so big, right? And like one of the slides, it's 60 to 70% of people are paying in cash. Now once you get a mortgage, there are definitely some, AML requirements in terms of funds being seasoned. If you get a chunk of money in from a relative, there has to be a paper trail. But I would say the UK and Europe in particular, UK, the regulatory landscape is really, really strict. And I think, UK is kind of a center of a lot of that type of activity. So yeah, it's not as easy as it doesn't pay to, it doesn't pay, there are a lot of people in this world, maybe a little bit older, they're affluent, they still keep money, in the safe. Yeah.
So we have
everything now is contactless even, right? Sorry, you can't even ride the bus.
Yeah.
UK without a credit card, contactless credit card, or your, something on your phone, and you just, it's insane.
Yeah.
Sorry, Robert, I interrupted you.
No, it's okay. So we have a couple questions. One is, in case you have ample liquidity to acquire the entire purchase in cash, would it still be advisable to go through a mortgage? I mean, obviously, we're going to say yes, but I think there's a lot of reasons why. Again, if you're just specifically talking about the US, besides inheritance tax, which is based on the equity-free portion of the property that's taxed, just in general, if you're able to pay cash for one property, why not buy 2 or 3 with leverage, especially if you're going to be able to get the yield that you're looking for. So in my opinion, and we get this a lot, people are saying, why would I pay with cash? Why would I get a mortgage when I can pay with cash? Interest rates right now are at the cheapest they've ever been in the US. So, I mean, it's definitely advantageous to pay with cash. A question is, do you help get pre-approved for a mortgage? And it must be property specific. It's a very good question. Before you start shopping for a property, we always recommend that you get pre-approved. So what you would do would be, you would go through the process, and it can be very, very quick and quite painless. We make the programs very simple. Once you get qualified for the loan, once you submit all the documentation, It takes us about 72 hours to get you a full underwritten approval. Once we get you that approval, then we issue you a letter. And then once you have that letter, you can go shopping.
You know, I want to kind of just add on to one question from Bambina earlier was, you know, where are people buying? You know, just to touch on, so we have two separate sides of the business. You know, we have a very sort of a high net worth type of team and product. You know, I think what this COVID-19 has done to everybody, it's that it's made you think about the next stage of your life sooner. So you know, I have kids in school. I'm not thinking about where they're going to go to college, but now I am. I want to think about, you know, what is my quality of life? And you know, in the US, you can't really beat it. I mean, obviously the English countryside is very nice. The beaches in Marbella are very nice, but you know, we see a lot of high net worth families in Indonesia, in Malaysia, in Singapore, and you know, LA, Bel Air, 15 million, 20 million. I mean, these are, you know, 10 million. These are monster houses, but these are generational homes. It's a great quality of life. You know, in New York, you know, obviously these really swanky, you know, luxury condos. But this is kind of made you think, maybe, you know, I don't need to just make money, but maybe think about, you know, enjoying it a little bit. And so we do see a lot of the kind of those type of transactions more than we did before.
Well, okay, on a personal note though, Donald, where would you consider buying yourself? You're saying you're based in Singapore.
Yeah.
College.
Yeah. So without a doubt. So, you know, we have a place in California. I went to school there. I've had that for quite a bit. But without a doubt, it would be in Texas. And there's a few reasons for that. One is that what the US offers more than other countries is that it gentrifies really well, right? So if you find that you're not earning enough in one state, for you to pick up and rent a U-Haul and drive to Texas, no other place in the world can that be done, right? And you can drive an Uber and, you know, and support a family. But, you know, as taxes become more of an issue, because, you know, I mean, corporations haven't been paying their fair share, and, you know, whatever we read in the news, you know, it's going to flock to those type of places. Texas is a real big beneficiary, and I think there's more room to go. And also Florida, you know, but Texas by far. Another thing is what's been an interesting, you know, I think Robert will have to confirm this, but we see a lot of college town demand, you know, where, you know, whether that's Boston or Philly, obviously LA, but, you know, where guys go in and they say, well, you know, there's only a certain number of, you know, four-year universities in the US, but the applicants, they're going up, you know, and that's from Asia, from China, India, you know, you name it. And, you know, a lot of these Asians, they don't want to put their kids in a dorm. They'd rather buy an apartment, you know, the old fashioned way. Maybe after they graduate, they can sell it and pay for it, you know, how our parents used to think. And that is a really interesting kind of trend that we've seen, where they go in and maybe get a few of these, you know, kind of you know, college apartment type dorms where the rental yields are really high because people will pay.
Yeah, no, I noticed that as well. You know, as our kids are going into college or have gone through college, it's become more and more of a consideration to get something that either they can stay in and they pay their utilities, or they pay rent, you know, in lieu of paying for a dorm.
And you know, it's kind of like a safety valve, right? You know, you have your son or daughter studying abroad, you know, whether you're in, you know, Indonesia or Vietnam or someplace where you never know, you know, what the world is going to be like, but, you know, maybe they get a job there and at least they have the property, they have the job, and, you know, there's a little more security.
And it's character building for the kids, right? They have to take care of the utilities.
Yeah. No yaya, you know, to follow them around in the US or UK.
Okay, well, Robert, do you have anything to add? Because
I want to thank you and your staff. You've been fantastic, and appreciate everybody that spent the time online. And if you have any further questions, feel free to reach out, email us, give us a call. We're happy to help.
Yeah, right. We'll send you guys a copy of the presentation. If anyone wants it, just drop us a note, and we'll send it to you. And otherwise, of course, this will be up on YouTube probably in the next 2 days, the full webinar, and you can always refer to it when you have time. And of course, we'll also include the contact numbers of Donald and Robert and GMG and American Mortgages as well. Maybe I'd like you guys to maybe summarize what we said. Any last words, like why go with you? Why buy abroad as well?
Yeah, well, I think it's fairly simple. It's like, why do you go to Amazon? Because they've helped you find the best. They've given you options for you to decide what's the best option for you. We're not trying a one shoe fits all. We give you options. If this suits you, then we put all of our effort into making that a dream for you. So we're about solutions. We're not trying to sell you we're not a bank trying to sell you, trying to meet our quota. We're trying to help clients. And I think in a world where there's more information, people are looking for yield, people are looking for just more diversification. Back to our core statement, we want to make this easier for everybody and fairer and take away the friction and the cost and the speed for this.
Great. Thank you so much, Donald. Robert, do you want to just close off the discussion?
Sure. Again, as I had mentioned earlier, especially if you're talking about the US, our only focus are borrowers like yourself. Again, 100% of our borrowers are foreign nationals or expats. So with that said, again, all the issues that you would have with a traditional bank or a finance institution, you're certainly not going to have. So yeah, that's my little pitch.
Okay, well, on that note, I'd like to thank everyone for joining us today. It's been a really interesting discussion. And guys, if you're looking for property to buy overseas, you know who to call. I get 10% of every sale, right? Donald.
That's it?
Well, I'm open to negotiations and discussions for more. So thank you so much, everyone. Have a good evening. I hope you enjoyed the food. It looks really, really yummy. And join us next week, Wednesday next week at 3 p.m. We've got to talk about COVID and how it's affected teens and children. So
what a good topic.
Yeah, it's a great topic. Join us, please. Yeah.
We'll do. Okay. All right. Have a good evening, everybody. Thank you again, Bambina.
Thanks, everyone. Bye.